Michael, we just introduced you. We mentioned the fact that when you and I spoke last year, we were pretty close to the highs. Well, stocks kept rising, but then you kind of predicted that off in the distance, you heard the bell tolling that there'd be a problem. So in terms of what we've seen, how bad do you think it is out there? Let's start off specifically with stocks.
Well, I think this is an unusual time, and I think we have a conundrum. I think that there is rarely a moment such as this where, as a contrarian, one sees so many reasons, technically, stock market-wise, to be bullish. Technically, stock market-wise. Can't end there. More shorts, more negativism, more unhappiness with more things, more concern. There's a real pall over America, I think. And all that has led to a serious decline in the market, a serious, continuous decline in the market with hardly a rally. So with all that laying on the market, I can't imagine a circumstance where a market is more available, more ripe for a rally than this one. Period. But I can't end there. Having said that, and I try not to speak out of two sides of my mouth, I think that this time it really is different, that there are genuine, solid, fearful reasons for a bear market here, and we're in the midst of it.
All right, so we're in the midst of it. We technically just entered it in terms of the 20% declines for the Dow and the S&P. So what does your gut say? I mean, how much worse in terms of losses could we potentially see?
That's an impossible question, but I don't think we're at a bottom. I think that that you can enumerate over and over again the various areas of problem. Companies, industries that heretofore had been sacrosanct are now vulnerable. General Motors, Ford, the whole airline industry, the banking industry, the mortgage industry, the brokerage industry. It's an extraordinary phenomenon where that which was the heartland of America is now so sick and not easily vulnerable to improvement. The banking industry can't easily create credit. We're running at substantial deficits, and you can't raise create any magic wands there. Those of us in the stock market are always looking for quick fixes, and I can think of only one quick fix.
Which is?
Which is what?
You tell me.
A dramatic, substantial drop in the price of oil. That is it. Nothing more. And
you over the years have been really concerned about oil and that there should be some kind of intervention. So is it speculators? Is it true demand? And where do you think that change would come from?
I'm not sure why oil has doubled in the last year. I don't think it's simply a vast increase in demand. It's more complicated than that. But it's too easy, for me at least, to imagine that if there were a will, and I don't think there is a will, if there were a will in the key centers of power in this country to get the price of oil down, it would come down. It would come down quickly and meaningfully. But I don't think there is that will.
When you look at something like oil, do you think bubble?
No.
Why not?
Because there are a confluence of forces that are complicated. Sure, demand is up in a variety of places and maybe on a secular basis. You've heard that in all sorts of other places. We don't have to talk about China and India, etc., etc. Sure, supply of oil may be peaking in a lot of places, but not to account for this extraordinary rise. A lot of it's political. A lot of it is inexplicable, but I don't think oil at $100 a barrel is very difficult to imagine, and that more than anything can change our picture.
So I just want to circle back because you mentioned names that the heartland names, General Motors, for example, Ford, you talked about banks in general. Are there big names that are going away besides Bear Stearns?
Well, that's hard to know, but there are big names that are vulnerable. You don't need me to say that. There are a lot of big names that are single-digit stocks that used to be solid blue chips of the highest quality. Whether they're going to go away or not, it really doesn't even matter at this point. Whether the mortgage insurers are going away, whether the municipal insurers are going away, it doesn't matter. The industry has been torn apart. And that's true in so many places that America will be a different place when this is over. Will be a different place. The promiscuous lending which abounds all over is not yet been fully impacted on our world. Yeah, we've had write-offs in the hundreds of billions, and how much more has to be written off? I don't know. Remember, a good loan is a good loan is a good loan until it's a bad loan. But the day before it's a bad loan, it's a good loan. And we're in the middle of a process where years, maybe even decades, of promiscuous lending on the part of all sorts of people have infected balance sheets, and we're in the process. Where we are in the process, I'm not sure.
So these hundreds of billions of dollars essentially in write-offs, it sounds like you think they're going to continue.
Yes.
And you're saying for years.
I don't think for years, but I think for at least the next year or two.
All right, I also, because our time together is going to be somewhat short, I want to talk about treasuries because it's been very interesting to track. You, I know from our past conversations, never thought we'd be in this current place with yields. Inflation has been a concern of yours. So what do you think happens now? Because obviously the Fed is kind of in this bind that it's talked about.
Here, too, we have this enigma where inflation not only is rising, has risen, and almost everybody you and I speak to scratch their heads and say, I don't understand how inflation last year was at a rate of 2 point something, while in my life, inflation was at 6 or 8 or 10. So number one, inflation seems to have been much higher than the stated numbers. Number two, it seems to be on the verge of being even higher with oil where it is, and the flow through from oil to chemicals and all sorts of other energy areas, and now food. So inflation is going to be a problem, and when it finds its way into wages, if it finds its way into wages, it will continue to be a real problem. And if it doesn't find its way into wages, it may even be a worse problem. So inflation is something we have to reckon with. However, on the other hand, the economy is weakening. So how do you balance greater inflation, weaker economy? And that's one of the Fed's conundrums at this point, which
So would you like to see the Fed raising rates?
I would like to see the Fed raising rates a little bit.
A little bit.
A little bit, yes.
So do you see any signs, and what signs would you be looking for that we've reached some kind of turning point?
Again, I would hope for,
Besides oil?
I would hope for a meaningful change in the price of oil, because that could create a new equilibrium. Lacking that, I think we're just going to have a lot of problems. And a new government, particularly if it's an Obama government, will set a whole new level of phenomena. You know, there'll be an effort to redress some of the unfairness of the past, the rich getting richer and the poor not getting
On
their
the
share of
tax
the pie.
policy, then?
On tax policy and other policies. And I think that's going to be an important element in the not too distant future, assuming he wins.
All right, we have just a short time together. If possible, in 20 seconds, this bear market, how does it compare in history? Do you think it's going to end up playing
It's just
equal to, worse, different than?
Oh, bear markets, you know, history repeats itself, some say, but during a period it doesn't seem to be repeating itself. And I don't think this bear market is going to be comparable to others. This time, as you're not supposed to say, it's really going to be different.
Michael, we leave it there. We're out of time.
Oh, my
We'll do it longer next time, I hope.
It's a pleasure.